Hello, hello. Have you ever wondered how SEEDS is different from all the other cryptocurrencies out there? Then this episode is for you. My name is Reiki. I've been your host on this journey. And what this is one telling of one story of how we got from where we're at today into regenerative civilizations. That's civilizations that are living in harmony with Earth and creating more fertility and abundance, rather than the current civilization, which isn't heading in a direction most of us want to go in. And we call this the regenerative renaissance. Now, in today's episode, we're going to get into how SEEDS fits into the broader cryptocurrency landscape. And if you don't really know a lot about money, or if you haven't thought much about money before, go back and watch part 1 of episode 12, which talks about SEEDS, Bitcoin, gold, and dollars, and kind of how they're different. And it helps lay the foundation to what we're about to discuss today. But if you're already a little bit familiar with money and cryptocurrencies, then keep going. Wait, isn't blockchain bad for the environment? If you're asking this question, I'm really happy that you are, because that means you're paying attention, and you're paying attention to the energy consumption that's going into some of these experiments. For example, you probably hear about Bitcoin and just how much energy it consumes. And you might have heard about Elon Musk talking off about how he's not going to accept Bitcoin as payments anymore unless Bitcoin uses 50% renewable energy. So we've got this whole narrative that Bitcoin can become renewable. What you're seeing back here is this is the largest solar park in the world, and it produces about 2,255 megawatts. And the solar park goes way beyond what you're actually seeing here. So what is renewable energy Bitcoin? If Bitcoin was running on entirely renewable energy, looking at solar parks like this, it would require 7 of these solar parks. And this is massive. This is not renewable. Look at all the plastic and metal, and look at the destruction of this landscape out here, completely wiped out and devoid of all life, just so we can harvest energy. And the life cycle of these solar panels, they're not going to last forever. So this is an enormous amount of waste that's going in to generate this energy. There's nothing renewable about renewable energy Bitcoin. So we have to take this into consideration, that we're not just thinking about how do we make it renewable. It's like, how do we decrease the amount of energy we're consuming? But it's not just energy, it's the miners. Warehouses and warehouses and warehouses full of miners. And these are just running basic computations to defend the network. This is an enormous, enormous amount of waste that's going into this. And on top of all that, what's going on right now? This is back in May. There's a global chip shortage. So we're facing a global chip shortage where we don't have enough rare earth metals and the material necessary to build the technology that we're wanting to build. And yet we're pumping warehouses full of these miners to run networks. It's just asinine. So that's why you're asking the question, isn't blockchain bad for the environment? And on one side, I would say yes, but on the other side, I would say absolutely not. Why? Because there's already been 3 generations of blockchain so far. Let's take it back up top. Bitcoin was generation 1. Ethereum was generation 2. It's moving towards generation 3 right now, which is really cool to watch. Telos, which is the blockchain that SEEDS runs on, it's generation 3. What this means is that we don't have mining anymore. Mining is a relic of the past and is really inefficient. So all of the new blockchains that are coming right now, they're already trying to solve for this. But regardless, Telos uses an infinitesimal amount of energy compared to Bitcoin. It's actually smaller than this line here, but we had to put something so you could see something. So there's no mining in Telos. The energy that's consumed is just the energy needed to actually run the network and process transactions. So, it's 0.001 terawatt hours. So it's orders and orders of magnitude less energy consumption. So to answer your question, yes, some blockchains are bad for the environment, not all blockchains. And certainly not SEEDS, because we couldn't be talking about creating a regenerative economic system if it was built on top of degenerative technology that's just being incredibly wasteful, right? And because we use such a small amount of energy, SEEDS only uses a fraction of the energy of Telos, right? But because we use such little energy, we're already carbon negative. So we've already subsidized enough tree planting and reforestation to cover our carbon footprint for many years to come. So again, if we're building a regenerative economic system, we have to start from sustainability before we can go further. All right, before we get into talking about some of these other cryptocurrencies, I want to start off by saying all of these experiments are amazing. The only reason SEEDS is as far as it is today is because of all of these experiments going on out there. I mean, the pace of innovation and new development and new experiments happening is just, it's impossible to keep up with. It's dizzying how fast things are moving. So the saying goes, you know, we're only here because we're standing on the shoulders of giants. That's so true. And there's a deep bow of gratitude to all the projects I'm about to talk about because I've learned so much. So this isn't a comparison, you know, like we're better than the other. You know, I don't see competition within the Web3 space. I see Web3 is competing against the old paradigm structures to rethink civilization. And all of the projects that are taking place, we're all on the same team. So I just want to lay that foundation before I carry on here. All right, so you've probably heard about DeFi, this idea of decentralized finance. You know, two new terms we're trying to put out there into the world is ReFi, which is this idea of regenerative finance, and REcon, which is regenerative economics. So if DeFi is decentralizing the financial systems, you know, creating things like algorithmic currencies, ReFi is building on top of that concept of DeFi, but game theoretically designing those currencies to regenerate our planet. So it's how do we use incentives to heal our Earth rather than incentives to destroy our Earth, which is currently what Bitcoin's doing. It's saying, let's create massive incentives to have massive energy waste, where it's currently using 0.1% of all energy that the planet consumes, which means it was an incredibly effective game. The game was, let's see how much energy we consume, and it played it incredibly well. But now we can rewire that game, and we can say, okay, the game is, let's regenerate our environment, let's regenerate our communities, and let's see how fast we can organize to get that done. So that's the power of ReFi, is to rethink coordination. So what is REcon? So REcon is taking that even further. It's saying, how do we design our coordination systems to regenerate our planet and communities? So it's not just designing new types of decentralized currencies. Now it's designing new types of economic systems, new types of governance systems, new types of currencies, which we'll get into at the end of this episode. So regenerative economics is beyond just thinking about finance, because an economic system is all about household management, is where the term originally comes from. And in today's global civilization, our household is our planet. There isn't, you know, before when there was massive empires, if one of those empires collapsed, an empire on another side of the planet was not affected. Civilizations on other parts of the globe, they didn't even notice it. But today, if our civilization collapsed, it is a biospheric collapse. So our household is no longer just nation states and empires and our own nuclear family unit. Our household is our planet. So that is what our economic systems need to be designed to do right now, is how do we best steward and take care of our planet? And why decentralized finance in this space is so cool is because it's allowing us to just build it. We don't need to ask permission. You know, a lot of the economic or ecological activists out there, they're focusing on petitioning government systems and our current economic systems to do better, to heal our planet. And it's a wasted cause. They're just not able to. They don't have the technical capability to change as much as needed to be able to actually address our crises. That's why we haven't done it. It's been decades and decades that we've known we needed to shift our behavior, but we just haven't been able to do it. So where, you know, DeFi and the whole blockchain Web 3.0 revolution comes in is it's providing us a foundation to build these alternative economic systems and being able to opt into them. We don't need permission. We can just do it. And that's what's so freaking exciting. And that's the foundation of REcon is what we're calling it. But regenerative economics is this idea that we can create new type of economic systems and we can just opt into them and bring value into those systems. And we're going to get into a little bit later just how much value we can redirect. There's so many different ideas of how we can design our economic systems. I mean, paper after paper coming from prestigious universities that have put decades of incredible ideas down on paper to say, let's redesign our economic model. And it just stays as a paper. Why? Because we can't software update capitalism. But you know what's really cool about regenerative economics and building it on top of Web3 decentralized software is because we can software update our economic systems. And that's where this is going to be, you know, paradigm shifting, is once we step into an economic system that can be updated as regularly and as easily as we update code and update our apps that we're playing, then we can start fine-tuning our economic systems to be more and more regenerative. We start playing this thing called an infinite game, where our game is to design an economic system that can best serve our needs and heal our planet. And imagine what would happen if we get billions of people playing a game to see how beautiful of an earth that we can create, and how best we can meet our needs, and how best we can create abundance for ourselves and others. It would fundamentally change what civilization looks like. So this is why we're calling it a renaissance. It's not quite a revolution. This is a fundamental rethinking of how civilization can be designed. And this is what SEEDS is focusing on. All right, a little bit of context. If you've watched some of the other episodes, certainly episodes 1 through 4, you know what's going on here. But for those who are new to this story, everything we're going to talk about SEEDS in this episode is talking about post-go live stability. Where we're at right now with SEEDS is we're in this pre-go live phase. And what this is it's mirroring biological systems. Every living system, it has different growth protocols at different stages of its life. Think about a baby in a womb. It's growing exponentially at one point. But those growth protocols have to change, because if that baby continues to grow exponentially and there's no birth, it would kill the host. It would kill the mother and take the baby's life with it, which is kind of what humanity's economic systems are doing to our planet. They're just exponentially growing, but they're not changing. They're not updating that growth protocol. But SEEDS does this. During the early phases where there's a lot of risk, it's a lot easier to get people to adopt a risky system if there's some type of compensation for that risk, e.g. upside. And this is something Bitcoin did incredibly well. For the people who bought into it early on, they were able to capture a lot of value for all the risk and early efforts they put to get Bitcoin out there. So I think this is a really healthy protocol. But what I don't think is healthy is if it just stays at that infinite growth protocol. It doesn't shift into a steady state protocol. And this is something new that SEEDS is bringing to this whole experiment that we're playing. So right now we're in this pre-go live growth phase where SEEDS is a fixed supply currency, which means that as demand increases for that currency, the price is going to go up. But post-go live, we're going to have this more stable currency, and we'll get into what that means later. But for a little bit of context, go live is not going to occur until SEEDS are at least 80 cents in price, but our target is around $1.30. We have at least 1 million regenerators on the platform. We have 10,000 organizations signed up and willing to accept SEEDS as payment. Why do we have these? Because we're looking to have a minimum viable economy. That's an economy large enough so that people could actually use it to meet their needs. So there needs to be enough organizations on board that you could buy food with this currency, that you could actually use it to exchange. So anyway, pre-go live, we're more of a fixed supply currency that's appreciating in value as we have that adoption. And then once we grow to the size of a healthy economy, we flip the switch, and then we become a steady state currency that's meant to hold its value and not necessarily increase. Okay, let's keep going. Yeah, I'll move this down. Yeah, so this is how we've been going so far. So we've got a nice steady rise in the price of SEEDS since inception. So we started about a penny, and right now we're just a little over 9 cents per seed. Okay, let's bring you back up here. All right, SEEDS is stable money. So if you watched part 1, this is just going to be a real quick recap. For money to be for money to be good, it needs to have 3 primary features: a medium of exchange, unit of account, store of value. Medium of exchange means it's something I'm going to use to exchange with others. This is what we know what money is. It's something I give you, you give me something else. It's a unit of account. We price things in it. I get to say that my time is worth X SEEDS an hour because I can price my time in that currency, right? So unit of account is how we price things. Store of value, this is a trust and faith in that currency, that if you're holding it, you're going to be able to continue buying things with it in the future. So these are the 3 characteristics you want to have in an ideal money. If this is completely new to you, go back and watch part 1. Moving on. So we're diving into the cryptocurrency landscape. And because SEEDS is attempting to be a superior form of money, we're only going to focus on the cryptocurrencies out there that are looking at being an alternative form of money. So when we think about cryptocurrencies, it's an incredible amount of new type of financial instruments that are being created. A lot of them aren't designed to actually be currencies or a new form of money. They're designed to be, new forms of assets or all sorts of other different type of financial instruments. So we're only going to be talking about some of the best cryptocurrencies out there that are looking at being an alternative to, fiat or an alternative medium exchange, right? So first and foremost, we're going to dive into the y-axis, rewards. So what are these platforms incentivizing? So at the start of this, we saw that some platforms are incentivizing energy use, but a lot of people have learned from that and said, hey, this is a waste. We can incentivize other types of behaviors. So let's look at that. First, we have the Bitcoin flow. So this is going to be our base mark of what we're kind of comparing everything else against. So Bitcoin makes about $10 billion worth of Bitcoin every year. And 100% of this new Bitcoin goes to miners. So we are paying miners $10 billion to provide that service every year for the Bitcoin network. 65% of that, give or take, this fluctuates depending on the price of energy, price of electricity. So 6.7 billion went to electricity costs or electricity firms and corporations last year. So what does that mean? Who are the biggest benefactors of the Bitcoin network? It looks like energy corporations are handsomely being rewarded. They look like the clear winners. Every year they're being paid $6.7 billion worth of Bitcoin. And that's a cost. These energy firms, they're not holding on to Bitcoin. Many of them aren't. So what does this mean? Bitcoin needs to absorb. It needs to add $6.7 billion worth of Bitcoin every single year to maintain the price of Bitcoin. Otherwise, the price is going to be going down as the cost to maintain the network is greater than the new value that's coming into the network. And that's a really, scary prospect as Bitcoin continues to scale. And the other massive benefactors here is mining companies and companies making mining equipment. Because again, those warehouses and warehouses and warehouses full of miners, they're coming from someone. So the two biggest winners behind Bitcoin are people who got into Bitcoin really early and held on to it. So just someone who invested at one point and held the currency and did nothing else after that. In fact, you're more rewarded if you absolutely did nothing with your Bitcoin for 10 years than if you were actually using it to buy things with, right? Second is the crypto mining companies. Billions and billions have been flowing to those organizations to make mining equipment, continue to excavate rare earth metals from our earth, turn them into machines to just secure a network, right? And then finally is the energy companies. So this is what we want to think about. We want to think, where is value flowing in these networks? What are we incentivizing? How are we coordinating? What's the main outcome that's happening? And right now in Bitcoin, the main outcome is using a lot of energy. So this is what we want to start rethinking. So SEEDS completely flips that switch. It says we're going to make new SEEDS, and we'll get into how we make it just shortly, but N% of those SEEDS are going to go to all the people on the platform. And this is how SEEDS is better than free, is because there's no cost to exchange SEEDS. But if you're doing that, we consider that a contribution. And if you're contributing to SEEDS, we're actually going to pay you some of the new SEEDS that are being made. So that's how SEEDS are the first ever better than free currency, is because all that money or all the new SEEDS flow out to all the people who are actually using the network. And this is a really brilliant way to step into a universal basic income, is creating our own financial systems that will just pay us for participating in them. Imagine if the Federal Reserve, it made how many trillions lately? It's a ridiculous amount of trillions of dollars being made. Imagine if the people got some of that money. We got, hardly anything. A few $1,000s, I think, was given out to some of the Americans there, compared to the hundreds of thousands they would have received if the money just went directly to them, right? N% of the new SEEDS go to regenerative businesses. So that's the businesses out there working towards healing our planet. So this is how we incentivize businesses to adopt regenerative behaviors. So rather than incentivizing businesses to buy up miners, set up warehouses full of miners, and burn a ton of electricity, we could be incentivizing businesses to adopt regenerative practices, pay fair wages, start regenerating their communities, environments. It's rethinking the rewards flow again, right? So N% to regenerative businesses. N% to regional DAOs, and we'll get into that just momentarily, and then N% to the global DAO. And the global DAO is how the network maintains itself. It's It's how we can pay for storytelling, to start letting other people know about the SEEDS ecosystem. It's how we pay for development, to be building new code and contracts. It's how we pay to have movement builders who welcome new people into the community, etc. So a DAO is a decentralized autonomous organization. It's where all the members who make up that organization get to decide how money is spent. So what's really cool is every citizen in the SEEDS ecosystem gets to decide how the global pool of money is spent. So the people get to decide directly. Imagine if you were using Bitcoin, and because you're an avid user of Bitcoin, you get to say, hey, you know what, instead of giving 100% to miners, why don't we give 90% to miners and we give 10% to charities? It would be really, really cool if Bitcoin holders could do that. Well, they can't. But in SEEDS, you can. And then the money that's going to regenerative DAOs, or those regional DAOs that are designed to regenerate our biospheres and regenerate they're called bioregions. It's these biological regions that have these biological boundaries. It's a different way of thinking about what is local. Instead of thinking in terms of nation states, we think in terms of biological boundaries. But either way, regions can have their own DAOs. And regions are actually getting paid through the SEEDS network, and they're getting this pool of money that then communities can decide, how do we want to spend this money? So as you join the SEEDS system and as your community grows, now you have more resources that you as a community get to start stewarding and deciding how we spend this. So we get to say, all right, we just got 100,000 seeds. How do we spend this? Well, let's have 20,000 go to set up a community garden. That's a really good idea. Or, Bob's been going out there and helping the homeless. Like, that's an amazing thing, Bob. Why don't we just pay Bob to do that? That's so cool he wants to do that. Why don't we use 20,000 of the community pool of money to just pay Bob to go out there and help people who really need it? Or why don't we as a community give out interest-free loans to businesses and help them incubate and set up and start investing as a community together? So this is what it looks like if regional communities can have their own type of economic systems, own type of governance systems, and be able to start making decisions as a community that best supports the community. And then what the seed ecosystem as a whole gets to do is we get to track how regenerative those bioregions are. And the more regenerative a region is, the more money we could pay it from the SEEDS ecosystem. So then we just set up an incentive for regions to come together to use their collective intelligence to best spend their funds to regenerate their communities. So we can track the quality of river water health. And we can say if that community, its river water becomes drinkable, we're going to give it this massive bonus for doing that. So we set up a reward to start regenerating our communities, to start regenerating our bioregions, to start healing our planet, which is what we need to do. And if we become just as successful as Bitcoin, then we would be able to redirect at least $10 billion worth of value every year. Imagine how much good we can do with $10 billion a year of redirected value. I mean, it's completely game-changing how much we can serve this regenerative renaissance. How many regenerative homesteads can we set up? How many community gardens could we set up with that type of money? So again, when we start diving into these new type of economic systems, we think, where's the value of flow going? Like, where's the money going? Like, what are we rewarding and incentivizing here, right? So it's a different way of thinking about this. Next, we're going to dive into the cryptocurrency landscape again. I'm going to take off my face so you can see the pretty seeds icon up there. All right, so we just talked about the x-axis here, which is what we're getting into how are participants in the ecosystem being rewarded. So at the top, we have multiple contributions are rewarded, and at the bottom, we have no contributions are rewarded, which means these ecosystems, they're not paying for anything. They're not paying for mining. They're not paying for movement building. They're not paying for anything at all. It's just the network exists. And the only way to get compensated for participating in these networks is if you buy up some of that network currency, so you make an investment up front, and then you do things in order to get the value of that investment to go up. So that's what I would say is there's no way of being paid to directly contribute to the platforms. In the center is we have one type of contribution. Bitcoin and Stellar, Bitcoin is just paying for mining fees or miners. So there's one type of way to contribute to the Bitcoin network. Set up a miner, start mining. And then what Dash did, which was completely revolutionary at the time, is they set up a treasury. They actually said, what if we gave 10% of the new currency that we're creating into a shared pool? Let's create a treasury and then let Dash, a subset of Dash users to be able to vote on how that money is spent. And this was awesome. complete hat off to Dash for, running with this experiment and, pioneering this. And they demonstrated the immense power of setting up that shared treasury, because now they could start directly financing and funding storytelling and people coming in and making videos to talk about Dash and go and do movement building and do meetups and help grow the community. So that was incredible. So we start getting into different ways that you can contribute to the network up here. The other axis that we really care about is the x-axis here. So all of the ones on the left, these are volatile currencies. So we're actually going to stop talking about them from here on out, because our premise is if you're going to actually replace fiat, if people are going to start pricing their goods and services in your currency and start accepting it to do business with so that it needs to be stable, we can't have a fixed supply currency, because fixed supply currencies, or currencies that have a fixed issuance, they're always going to be volatile if demand is changing. And every one of these currencies on their entire pathway to full-scale adoption, their demand is changing. So at no point during their adoption rise are they going to be stable. So I don't think they're going to be an alternative to fiat anytime soon, which is why a lot of them get called, alternatives to gold, because they behave more like gold than fiat currencies. So then on the right, we have stable currencies. So these are currencies that are trying to be stable. And this is what we're going to focus on throughout the rest of this episode. And it's the same idea is, there's very minimal ways sometimes to contribute to a lot of these, stable currency projects, but it looks like most of them are doing really cool and moving towards setting up community DAOs and then letting the community start governing how they spend collective funds, which is kind of what Dash did. So Dash was able to say, hey, we have a central node that's managing a treasury, and then all of the different participants get to vote how that treasury is spent. But what we have way at the top, which is why SEEDS is still a little bit higher than that concept, is we already have the treasury as well, which is what we talked about with that global and regional DAOs. So communities get to govern a treasury, the whole system itself gets to govern a treasury, but we're also redesigning different types of contributions. So go back and watch episodes 1 and 4 if you haven't already been familiarized with this concept, but it's called proof of contribution. And then the citizens themselves get to design different protocols to say, hey, if you're actually spending seeds, we're going to consider that a contribution, and then we're going to pay you for doing that. That's one idea out of a lot that we can program into the system. So there's a myriad of ways that people can then start contributing and getting paid for showing up and helping the system thrive and helping build regenerative civilizations, which again is the entire point of all this. Okay, moving on. We're going to be diving in more into stablecoins. So SEEDS is out here to create a different type of money. And in order to do that, we need to be stable. And when people say stable, the next question you always got to ask is stable to what? So it's a little bit funny when everyone's saying they're pegging their stable currency to the US dollar, because the US dollar is not stable. This is the purchasing power of the consumer dollar dropping over the last few years. And a lot of models suggest this is about to get a lot worse because of how much new money was created recently. So if you're stable to the dollar, I don't think you're an actual stable, better form of money. So if you want to know how a lot of projects are handling that peg stability to the dollar, there's an article that I linked in here that goes through and explains what algorithmic stablecoins are. And it's a really good foundation to better understand the next things I'm about to talk about. You don't have to go out and read it, but if you do, go ahead and do that now. And welcome back, or let's carry on for those of you who didn't read it. All right, so this is what it looks like. And this is talking about stablecoins here, and this is my first meme that I've made. On the left, you see this is a really popular meme. At the top, you have inflation, and it's talking about silently robbing you of purchasing power. And this is very pernicious. Minimum wage hasn't really changed. In the US, for example, minimum wage has stayed pretty stagnant. But if your purchasing power is dropping while your wages are staying the same, that's the same as getting a demotion year over year. And this is exactly why we have such inequality today. It's because a lot of wages and salaries are staying fairly stable. They're not getting that big of salary boosts every year, but the purchasing power of the money that they're getting paid is dropping. So this is a grand scale larceny going on. It's theft on the largest scale, especially when we don't have a say in how that money is being spent. But then what we did is we combated this with another extreme, is we set up deflation. And what both of these do is they end up concentrating wealth. The top one concentrates wealth into the people who own seigniorage, which means the ability to be able to make new money. So those who are making new money, they're paying themselves first, and that's how wealth is being concentrated, because big bankers are using that money to buy up assets, and then they're owning more of the world, which is why, since we've had this pandemic, the billionaires of the world have seen their fortunes just balloon, whilst the poorest on the planet have seen their fortunes shrink and shrivel. And it's based on how our financial system's set up. But deflation does basically the same thing. You can come in. The next slide is actually diving into the deflation one a little bit more. So the final step is what we actually want to do is a little bit of both. We want deflation in the beginning, or this idea where the value of that currency is going to increase. The purchasing power will increase in order to compensate early risk. Because people joining networks early, like Bitcoin and with SEEDS, we've talked about this a little bit, but having the ability to compensate that risk and compensate the people who show up at the beginning, I think that's really powerful. So what we said is, okay, we're gonna keep that model. And for the first stage, which is where we're at right now, we're gonna have our purchasing power intended to increase. But then after it does, we're gonna keep that stability so that we can have a steady state economy after that. So that we have neither inflation nor deflation, which is what we need to have a foundation for any type of stability in our economies going forward, because both inflation and deflation are both going to drive us to the extremes, which is going to see breakdown and collapse. Why are we going to see breakdown and collapse? Because anytime the Gini coefficient stays, so Gini coefficient, it's a measurement of inequality in a given economic system or financial system. And right now, the Gini coefficient for Bitcoin is an astonishing 0.88, while the US is 0.41. And we could consider the US pretty unequal. But right now, Bitcoin, and I believe Ethereum is up there as well, but don't quote me on that, are both more unequitable in their current distributions than North Korea, which is the most unequal country on the planet. That's not painting a very, very pretty picture, because inequality is one of the biggest crises that humanity has right now, because that's caused civilization collapses in the past, and it's going to cause it again if we don't sort it out. So we need a way to slowly reduce or even rapidly start reducing inequality to avoid that kind of collapse scenario. So here's the Bitcoin rich list. And what's really interesting about Bitcoin is it's going to cap off at 21 million, right? So that means if I own 1% of the supply of Bitcoin, which one private company has about 1%, and imagine having 1% of all of the money of a world reserve currency. That is an enormous concentration of wealth. Right now, Satoshi Nakamoto, it's estimated that they hold 1 million Bitcoins, which is nearly 5% of the amount of Bitcoins that will ever be created ever. Imagine if one group or one single person even owned 5% of all of the gold on the planet, or 5% of all of the dollars, euro, yen, etc. So this idea that Bitcoin can become the de facto global currency, it's going to result in the most concentrated, the greatest concentration of wealth that the world has ever seen. Like, we would find our first trillionaires. Satoshi Nakamoto would be the first trillionaire on the planet. Is this something that we really want to celebrate? So I really want to talk about this idea that Bitcoin talks about decentralization, but it's only decentralized in how the technology is set up. It's not even remotely decentralized in how the economic rewards are distributed. So how many Bitcoins are there? Anyway, 89% of all the Bitcoins that will ever exist have already been distributed. Okay? And it's estimated that only around 4% of the globe owns crypto. So what we're saying is the distribution is already 90% complete, but we only have 4% adoption. And within that 4% of adoption, the Gini coefficient is more extreme than North Korea. If this plays out at any scale, it's just going to rapidly accumulate and concentrate wealth, which will lead to more, revolution, civilization breakdown, etc. This isn't what we want for a global adoption. At least it's not what I want. And actually, it is what some other people want, because the wealth concentration story is a really powerful one. because that drives adoption, it drives the narrative, it drives this kind of fanaticism, because if you can acquire it and really drive the value of it, then there's an incentive to continue to get others to adopt it, to grow your own value, right? So that wealth accumulation and concentration, it works for growing networks and creating adoption. But I don't think it works for creating a healthier economic system. So to remind, SEEDS is this evolutionary currency. So again, we have that accumulation phase where it is meant to appreciate, but then we have that stable state. And I'm actually highly encouraging any project out there. I mean, it would be incredible if Bitcoin can do this, if they can consider this, if they can put a conscious point in the future to say, okay, at this point, we're going to stop the wealth accumulation story, and we're going to shift into a steady state economic system. And it could start adopting some of the protocols of experiments happening right now. And that would be really, really cool if Bitcoin could evolve to do that. All right, so what does this stability after go live actually look like? So when we talk about stable within SEEDS, we're talking about intrinsically stable. And what would success actually look like relative to the central bank notes and these currencies that are losing their purchasing power? It might actually look like SEEDS is going up in price every year. So they would look at SEEDS and see the US dollar value kind of fluctuating and kind of going up, and they'd be like, oh, well, SEEDS isn't stable. It's like, no, SEEDS is stable, but the US dollar isn't, right? And that's actually what we want. Because with things like the US dollar, we have this thing called a menu cost, where anyone who's selling their goods and services and pricing it in dollars, every few years they have to change their prices and update how much they're charging. And that's an enormous waste on our economy. We constantly have to rethink how much a dollar is actually worth. And unfortunately, people are slow, which is, again, how that inequality sets out. Because people think, oh, this big of a salary is really good. And we get it in our head that that salary is good. But we don't realize that if that salary is not increasing by like 10% every year, or depending on how crazy inflation is at the time, then you're actually making less and less. So I made that point, but it's so important because that's how theft at large scale happens. So SEEDS wants to be more stable, not having that. While other assets like the artificially scarce cryptocurrencies out there, they're going to stay volatile. They might appreciate in value and increase in purchasing power well beyond SEEDS does, and that's fine. They're a different type of asset. They're more of a speculative asset where people are buying into it with the hopes of them going up. But we want SEEDS to be more of a medium exchange. It's a currency to build a new type of economic system. We're not trying to build new speculative assets to, fund Wall Street's gains for the next few decades and fancier new tech. That's not the point. The point is a new type of economic system, and we want it to be intrinsically stable. How do we do that? What is this intrinsic stability? So there's this basic calculation in modern monetary theory, which is MV equals PT, which is essentially on the left side of that equation, we have the money supply, and on the right side of that equation, we have economy. And this is just a basic supply and demand curve. And how that works is when the economy is growing in size or shrinking, we grow or shrink the money supply in tangent with the growing and shrinking of the economy. So the supply of currency to meet the demands of the economic system is going to change as the economic system changes. So what that means is that in that economy, that currency is having a stable price. So this is what we talk about intrinsic stability. So when we talk about stability, we're saying we're trying to stabilize the value of SEEDS to our own economy and the supply and demand of SEEDS within that economy, opposed to saying we want to stabilize it to the US dollar or a basket of goods. This is a completely new way of thinking about how to stabilize a currency, or at least how to program this, because when these calculations came out, and modern monetary theory was being considered, blockchain wasn't a thing. It wasn't a thing to create algorithmic currencies. It just wasn't a consideration. So they weren't actually thinking, how do we take these protocols and codify them to build an economic system? They're thinking, how do we study the economy? Because in our old economic systems, we don't have perfect information about the money supply or how much goods and services are being sold and exchanged. We only have best guesses. So that's one of the cool things, again, about algorithmic currencies, is that we can create a currency that's algorithmically designed to be stable within our own economic system. And that's essentially what SEEDS is doing. If you want the whole story here, dive into the guide, and it goes, part 3 of the guide gets into the financial system, and it works through all of these different protocols. So this is something that excites you, go to the show notes and check that out. All right, so what we're trying to do is we're trying to create a more stable token. And up until now, unfortunately, there's a lot of background that was needed in order to fully understand what's going on here and how we can start thinking and comparing some of these tokens. But now we're going to get into comparing a lot of the different currencies out there and how SEEDS kind of fits into that landscape. So how is most of the projects creating stable tokens? They're doing it with this two-token system or a multi-token system. So that's what we have over here is these, multi-value tokens. There's multiple different tokens within the ecosystem that are being created. Right down here, we have multiple token fiat pegs. So they're trying to create new tokens for the US dollar, new tokens for euro, new tokens for yen, etc. So the US dollar coin is up here with a single token because it's just for US dollars. Tether is just for US dollars right now. So they're a single token fiat peg. Down here, Celo and Terra and Reserve, they're all making multiple tokens. So a stable token for euro, a stable token for dollars, etc. What does this mean? It means that there's a lot of different tokens throughout the ecosystem that are accruing and capturing value. So it's just spreading out value a little bit further. Why is there an arrow for these three projects moving this way? It's because they're starting to have multiple value tokens. So they're going to have a bunch of different types of tokens that are backing the fiat peg tokens that they have right now. It's not currently that way with any of these projects, but they all have a roadmap to kind of create that, which is a really interesting thing to go about creating stability. And we're going to get into a little bit more of this, the two-token system, actually, coming up right now. So what is the two-token model? The two-token model is there's one token that captures value and risk, and there's another token that transfers that value. So one of the tokens is stable, and the other token is volatile. And this is currently preferred by the traditional investment thesis, because they want to invest in that volatile currency or that volatile token because there's a chance that if those ecosystems thrive and succeed, the price of that volatile token is going to skyrocket and go parabolic, which is what they want. They're wanting to invest and get a 10,000x return or something. And how these ecosystems grow is that they have this stable token. So in Reserve, it's called the Reserve. That's the stable token that's meant to be stabilized and across value. And the Reserve Rights token is the one that helps stabilize it. So the Reserve Rights is volatile while Reserve is stable. So if you want to learn a little bit more about this, again, go back and read that stable tokens article that's linked in the show notes. But it's the same thing for Terra. Terra has two tokens, as Luna, which is the volatile one, and Terra, which is the stable one. Let's see here. So this is how I look at the two-token model. Is one of them, the two-token model represents the revolution. It's, it's changing the way that we do money, but it's staying within the same paradigm. Because the revolution, all of the two-token models, they still come with transaction fees. So you're being charged to use the network. It's reconcentrating wealth because that volatile token, in some cases, if I own 5% of the volatile token supply, I own 5% forever. And if that's the case, then that's just concentrating the wealth again. Then it's saying if you own 5%, then you're going to get 5% of all the transaction fees that ever go through our network indefinitely. And if this becomes the global reserve currency, again, that's just concentrating massive amount of wealth into those token holders, right? So it's the reconcentration of wealth. It's not really rethinking the distribution of value. And last, a lot of these two-token governance systems is the volatile token is the governance token. And that's a governance token that can be bought. And if you have a governance token that can be bought, what you're saying is governance can be bought. And if governance can be directly bought, what do you have? You have a plutocratic governance system, which is governance by the wealthy, which is what these systems are doing. They're creating pure plutocracies, which the more wealth you have, the more voice you have, that's it. It doesn't matter how much you use the system. It doesn't matter how much you've contributed to it in any other way. If you've got money, you get a bigger say. So I say this is kind of part of the revolution. It's really cool technology. It's doing a lot of epic things, and it's certainly providing a really solid foundation in order to move into the Renaissance with. So I like to say, beyond the revolution is the Renaissance. But I don't know if we want to redesign rent-seeking behaviors into our financial systems, because even if those transaction fees are small, if we're creating currencies, and a lot of these projects, they're talking about, banking the unbanked. And the unbanked are the most vulnerable, where, even a penny transaction fee is something significant to them. And if that penny is being paid from somewhere in Uganda and being paid back to a Silicon Valley investor in the US, what are we doing? We're reconcentrating wealth. So I think we can't have transaction fees in our systems that go and pay a minority share of holders. So that's one of my biggest things with the two token model is I think they're all well-meaning. I think these projects are great, at least the ones I've looked into. I'm pretty positive we're all allies, but I just question the economics of how their systems are designed because they're not quite going as far as we need to go. So what is SEEDS looking at? It's talking about a renaissance. We're looking beyond fees. There's no transaction fees and you could actually get rewarded for it. So we have this better than free concept. We're redesigning the distribution of wealth. We're not just reconcentrating it again. We're redesigning the distribution of voice. Lots of people get a voice, and you don't even have to have wealth in order to have a voice. So it's fundamentally different from plutocratic governance. And if you want to dive more into that, then go back and watch, episodes 5 and 6 that get into the governance of SEEDS. All right, so let's keep going here. All right, so we're going to go back to the landscape here. So on our x-axis, we have the complexity of the protocols. Are they able to be easily updated? What are they incentivizing? What are they rewarding, etc. So that's the x-axis is the simplicity of the protocol over here, which is building new type of financial systems. Or there's on the other side, which are really complex protocols that are building new types of economic systems. So it's a higher order of complexity that's required in order to coordinate an economic system than it is to govern a new type of financial system. So that's why the Bitcoin white paper is so short and to the point. It's very basic. And for a lot of folks, that's a huge benefit. And where I think Bitcoin shines is it's a hedge against uncertainty. And you can see the price of Bitcoin kind of taking off whenever uncertainty happens on a global stage. Because Bitcoin is one of those things that's not designed to change. It's designed to kind of stay the same. And in times of uncertainty, Bitcoin does incredibly well. So that's, hats off to Bitcoin for designing that. However, that's the opposite of what we want for an economic system, because we need an economic system to be adaptive, to be evolutionary, so that we can better meet our needs, better address the crises that we're experiencing right now. So what I really appreciate across the x-axis and why some of these projects are in the middle is some of these projects are talking about doing that. They're moving away from just being new financial systems and thinking, hey, how do we start stepping into being a new type of financial system for new ways of designing economics. I see them being kind of at the cusp, and some of their future thinking designs out there are starting to bring that up, which I think is great. Down here at the bottom left, the y-axis is all about where value flows. So at the bottom we have centralized value accumulation. So DM, which is the Libra, was what it was before. It's the one backed by Facebook. This is centralized value accumulation. There's some projects that are able to get buy-in and they capture all the value of DM succeeding or not. People who actually use it, they're not really going to get a lot of benefit from it. So this is a centralized value accumulation protocol. Same thing with Tether. The company behind Tether and USDC, etc., they're the ones getting all the benefit of the adoption of these stable coins. So Tether users, they don't get a kickback from all the interest that Tether, the company, earned. So this is a centralized company, centralized institutions capturing all the value. What's in the center with DeFi is this decentralized value accumulation. It's still accumulating value, but now all of those tokens that capture the value are traded on DeFi markets. So you can easily get a hold of them if you'd like to. So you too can participate in the value accumulation protocols. And that's why I say it's part of the revolution. It's not shifting the paradigm, which is shifting value accumulation, but it's shifting who gets to participate. And that's why I think it's really cool from one level, is it's saying let's level the playing field. Now everyone can participate in the most pernicious parts of capitalism. So take of that what you will. And then on the top is consciously co-directing value. So it's no longer about value accumulation. It's about how do we use these value protocols to reconsider coordination. So we have this challenge. We have global hunger. We need to reforest our planet. We need to clean up the Great Pacific Garbage Patch. Good. We have value If we owned our own central banks, we just made how many trillions? Cool. We have how many trillions in the bank? We have these challenges we needed to solve. What's the best way we can go about solving them? And this is consciously co-directing value. It's not saying like, hey, you set up the central bank, so by default, you get 10% of all the new money. We're saying, hey, you set up the central bank, great. We're still going to consciously decide how we spend those trillions anyway. So that's why I say it's kind of a new way of approaching this and thinking about these protocols. So that's why we put SEEDS up here and say it's a class of its own, because as far as we've seen, and the only reason we started doing this project is because it didn't exist yet and we know we needed it. I think I speak for a lot of the people on the team that our primary focus isn't building new financial systems. It's just we started doing this because we knew we needed to in order to do all the other things that are necessary to help humanity at this time. All right, let's keep moving on. Right, so you see down here some more words popped up. So what is new types of economic systems? What does it mean to have a complex protocol? It's not just building a new type of financial system. It's building new classes of currencies, new types of currencies, not just different named ones that still behave like US dollars do, but currencies that have different types of behaviors behind them that track different flows of value. New types of governance systems. So it's not just saying, hey, let's have a plutocracy, or let's have governance systems that are following what corporations and centralized governments have been doing. Let's rethink our governance systems. And we need the protocols that are complex enough to be able to handle that complexity of rethinking governance. And it's the same thing with new economic possibilities. Once you start rethinking value flows and rethinking governance systems, all of a sudden you have a new type of economic system. And you can't have very basic protocols governing that complexity of an economic system. So, where's the foundation for these projects? Are they considering new economic possibilities or not? And that's the idea here. Moving on. So this is where it starts getting really interesting. What's going to actually replace physical cash? Because right now, physical cash, it's free to use. It's instantaneous. If I'm walking down the street and I want to buy something, I pull out cash, I give it to them. There's no transaction fees. Nobody knew I did it, and it happens instantaneously. And there's a saying out there that says, for one type of technology to take over another, it needs to be 10 times better. How do we get 10 times better than instant and free for in-person monetary exchanges, right? So what's going to actually be able to replace cash? So that's one way we started thinking about SEEDS, is if we're going to be able to really be this new type of currency, we need to be 10 times better. So, what's better than instant and free is instant and better than free, because you can't get quicker than instant. So that's where SEEDS started off, is how do we give rewards for people who are participating in our economic system? How do we make transactions better than free? And I think this is one of the things that sets SEEDS apart above any other project that's considering this right now, because all other projects come with fees. And then again, those fees are paid back to the minority of the people who are holding that volatility token, and that's what's concentrating wealth. But again, that's why it makes those ones a little bit better investment for the traditional Wall Street thesis, is because they're saying, how is this going to capture value for now and into the future? How am I going to 10,000x my investment? Well, it needs to be able to have this value flow. And in order for it to have a value flow, that value's got to come from somewhere. So that means that the investors that came in early, they're wanting to suck value from the rest of the ecosystem indefinitely. And this comes in the form of fees. SEEDS, we don't have to consider it that way. We're coming at this from a new type of economic system. We don't have any VC investors. And when I say we, I mean the SEEDS ecosystem hasn't taken any VC money. It's been community funded. And it's just a completely different approach. It's not saying, how do we make something that we could pitch to investors that is a really beautiful thing for them to earn a bunch of money on. We're saying, how do we build a new type of economic system? And we think letting that value flow back to all the participants in a better than free rewards currency system makes way more sense than letting that value concentrate in a minority of investors. So that's on the top. How do we get better than cash? We become better than free. How else do you become better than cash? I have no say when I'm using fiat. But if I start having a say, if I'm able to have a voice in the currencies I'm using, I'm going to use those currencies because they're part of me now. I'm benefiting from this. It's rewarding me when I'm using it. I have a say in how it's evolved and how it develops. This is fantastic. So I think that's where we become 10 times better than traditional money, is when we have money that's going to pay you to use it, give you a direct voice, and start meeting the values that are most important to you, like the ability to start regenerating our planet and getting a future for our citizens, or for our kids and for our posterity, leaving them a more beautiful world than the one that we stepped into. Those are currencies that I want to use. So that's what we see here is on the x-axis, we have, no voice and governance on the left. Again, these centralized currencies. Bitcoin, if you're using that, you don't have a say. If you're a miner, you start having a say. That, a small minority of people within Bitcoin are actually miners. And it's very difficult type of governance. Why on the right, what I think is really awesome, and you see a lot of these projects, they're all setting up DAOs. They have a process to be a, user-governed systems. For what I've seen so far, they're all still plutocracy governance, but it's still governance, and that's fantastic. So a lot of projects are moving over in that idea to start giving governance over to the community. And where are we at with the fees? So I've kind of captured some of these fees. Across the board, all the projects that exist on Ethereum right now, it's around $7. Sometimes it can get a lot higher as the average fees. I realize in practice, sometimes when you're just sending a token, it could be less. It's a huge fluctuation on how much fees, exist on the Ethereum network. And then if the projects themselves come with an additional fee, then you're being, added on top of that. So that's why you see the 7++ is the volatility of how much it actually costs to send, plus whatever the platform's taking. And then you have Celo. Celo's one of the best out there as far as I see. It's around, a penny in transaction fees. I think that's great. We absolutely need to do that. And I think Celo is really strong for, replacing remittances and being that really early bridge, because people are going to have a lot easier time in the immediate term adopting something else that's called a dollar. It's like, oh, it's a dollar. It looks like a dollar, acts like a dollar. It's priced like a dollar. And now I have this alternative dollar that I could send for cheaper. Great. So I think Celo and those types of projects are going to be incredible bridges and do a lot of beautiful things in the world. SEEDS is just trying to take it a little bit further. And then you have ones that take a percentage. So you see the bar kind of going down because it depends on how much you send, depends on how much your fee is going to be. So what happens when you have a $7 fee? If you have a $7 fee, I don't want to, I'm probably not going to buy anything with that unless it's at least $300. Because even at that point, I'm being charged, around 2+% to be able to make that purchase. But on the inverse side of that, it's fixed fee. So if I send $100 million and I only have to spend $4.5 like on Bitcoin to do that, that is paradigm shifting. That's really, really powerful. That's the revolution, right? And I think that's what's really cool in Bitcoin was the ability for people to literally send tens and hundreds of millions of dollars across the globe to somebody else. So I guess it's not really across the globe in a sense. And pay a really small fee for doing that. Really, really cool. But again, SEEDS is just thinking about this in a completely different way. How do we make those, $5 exchanges or day-to-day interactions? How do we make it so people want to use SEEDS for that? And it can't have, any exchange fee or any trading fee at all if it's going to replace cash, which is ultimately what we're going for here. Okay, let's keep flowing. I know this is a lot, but we're coming to near the end of this, but let's just keep running with all of this. This is fantastic. This is probably one of the most important slides, the most important, comparisons going on here. Because none of these experiments matter if we don't have a thriving biosphere. Okay? I feel like that's probably worth saying again. It doesn't matter all of the new type of economic systems that we're coming out with, new type of financial systems. None of these experiments matter if our planet can't support life. And if we're not creating healthier ecosystems, if we're not creating an environment and a planet that's going to help humanity thrive, what is the point? So that's what we see here on the x-axis is, are we financing ecological regeneration or are we financing ecological degeneration? And as we kind of started this off at the beginning, Bitcoin is definitely incentivizing and financing ecological degeneration. Tons of money flowing to energy companies, tons of money going to mining producers that are taking up rare earth metals to build boxes, to put it in huge warehouses. It's an enormous amount of ecological destruction to set up those currencies. Why in the center is more where it's balanced. I put some of these projects because they're using way more efficient, generation 3 blockchains. So they're not nearly as, destructive as the proof of work ones. In the middle are the ones that are being used by Ethereum, because Ethereum is still really destructive as far as its proof of work. However, Ethereum is moving to proof of stake, and once they make that shift, they're going to be much better as far as their sustainability report goes. That's really awesome. But right now, humanity doesn't need sustainability. Like, everyone's talking about sustainability. That's just how we sustain. We need to reverse the damage we've caused, because there's already some feedback loops and planetary tipping points that we've hit. Even if we stopped emitting all carbon right now, we're still going to have some really negative effects going forward. And of course, let's not hyper-focus on carbon. Regeneration is a deep practice. There's a lot of ways and different practices that we have to put out there to really heal our planet. It's not just about setting up carbon-sucking technology. It's like we need to clean the waterways. We need to reforest our deserts. Like, there's so much that needs to happen, right? So our financial systems, they need to be regenerative by design if we're going to solve these crises. So it's something that's not being talked about nearly enough in this space, and I feel like we need to keep harping on this. And if SEEDS can do one thing, it's to demonstrate how we can build regenerative financial systems, regenerative economic systems. We're doing it open source, and we really hope all of these other projects will start adopting these protocols and start being regenerative too, because we need to work together to start healing our planet. SEEDS isn't out here to try to compete with you and say, hey, we're better because we're regenerative. We're saying we need to regenerate our planet, and we need as much help as we can get to get there. Check out these protocols we're building. Maybe you can adopt them too. So that's kind of our approach going at this. The other axis we have here is the inequality axis. Again, civilizations collapse when inequality gets too extreme. So we need to start reversing inequality. And unfortunately, a lot of the Bitcoin, a lot of the other cryptocurrency experiments out there, they're just fueling inequality. The biggest benefactors of some of these projects are huge VCs that put in tens and hundreds of millions of dollars into these projects. And they're going to make hundreds of millions and billions off of it. That hundreds of millions and billions could have been redistributed in a much more healthy, much more equitable way. And, again, that's something that SEEDS is focused on. So no big money in backing this, investing in this. It's going to try to get a huge return on it. The early founders and investors of SEEDS, like the people who came in since the very beginning, if this thing really takes off and gets as successful as, say, like Bitcoin is today, they're going to make tens of millions of dollars. While the inverse is some of these projects that have already, they're just getting started, their founders have made hundreds of millions to billions of dollars. We have so many new billionaires in crypto. Like, that is an incredible inequality that we're just recreating in our new economic systems. And that's not what this renaissance is about. It's what the revolution is about, and we can do better. So getting into that a little bit more. So yeah, that's where, SEEDS, it's a class of its own. Like, projects aren't thinking how to reverse inequality or financing ecological regeneration. At least these projects aren't. There are some projects out there trying to do UBI tokens. Awesome. They're saying let's reverse inequality by just minting tokens and airdropping them to whoever wants to show up and earn them. That's really great, but unfortunately, if they don't also solve the demand side of that equation, why people want to buy these tokens to begin with, if all they're relying on is goodwill, I don't think those projects are going to succeed. So that's the other angle that SEEDS took here, is we say we need to still have economic balance, which is what that MV equals PT equation is. We still want people to be able to trust that they can trade their dollars for this, and it's not just going to lose value because everyone wants to sell it. That's unfortunately what happens with a lot of the UBI tokens, is people get it, they just want to sell it for other dollars that they can use. And there's no real incentive to hold on to it. So that's why we wanted SEEDS to be a better than free currency, so that instead of trading SEEDS for dollars to spend a currency that's not going to reward you, you'd rather just spend SEEDS. So that's how SEEDS is kind of approaching this, is like, if we're going to reverse inequality, we still need to be, economically superior. We just don't need to exaggerate it so that we're fueling inequality again. So, when I've talked about new types of currencies, this article is also linked. Go check it out in the show notes. And it talks about gratitude. So gratitude is a different type of token within SEEDS, and it's a different way of redistributing value within our system. It's kind of a hive intelligence economic model. And what's cool about gratitude is, in real short form, everyone gets the same amount of token every cycle, and then it only means something once you send that token to somebody else. So you start off with 100 gratitude, means nothing to me. The only thing that means something to me is the gratitude that I get and the gratitude that I give. So now everyone has something to give, and we use this as a signaling tool. Because in the, as the cycle progresses, we see the flows of gratitude and where the gratitude flew throughout the system, and then we send them SEEDS, which is the value token. So this way we can say anyone can show up to SEEDS, do stuff that other people are grateful for them doing, receive gratitude, and then get paid at the end of the cycle. So this is what we're saying is we can rethink, value exchange. Instead of this whole story where in order for me to give to you, I have to take from myself, which is how money works right now. I have money. If I give it to you, now I have less money. But when I have gratitude and I give it to you, I didn't lose out anything. It's not a zero-sum game anymore. We both benefit from using that gratitude, which is really cool. So yeah, this is where this is just one example. Go read the article for a couple more. Keep flowing. This is something else that's really, really important. So we talked about that inequality bit. This is the distribution of value, the token allocation of some of these projects. And what's interesting is that this particular model decided to have public sale and insiders different. And really they're the same. It's the insiders that are selling those tokens and getting the benefit from it. But in some cases they're different. But I kind of look at them as very similar. What I think is really important to look at is the community allocation. How much of any of these projects' new tokens went towards the community, went to incentivize all of these different behaviors, like how much went to go reverse inequality, went to regenerate our planet, went to governance pools for communities to rethink how they do governance and spend this value. So how much went to the community versus how much was held by the people who set those systems up. And if you look across a lot of these projects, an incredible amount of value is held by a few insiders and different VCs. So this is where I'm saying it's a strong part of the revolution, because if these projects succeed and really do take over to be new types of currency systems, the VCs that back them are going to be the most wealthy organizations in the world. If they're not already, which they kind of already are. But it's just extreme wealth concentration and accumulation, which is why there's so much money flowing into this space, because there's so much potential to make a lot of money. So it's driving a lot of energy here, but it's not something that we were really excited about doing. So how SEEDS was originally set up is 70% of the initial SEEDS that were created. So that initial period where there's a fixed supply of SEEDS before we start being algorithmically stabilized. 70% of the new supply of currency is directly governed by all the citizens on the platform. And there's a couple different ways that they're governing this 70%, but it's completely up to them how that 70% is spent. And I say them because anyone listening to this call can join SEEDS, go through the steps it takes to become a citizen. It's really not that difficult, but we just got to make sure you're human and that you have skin in the game. And then you can start governing the 70% pool too and start having a voice. Really awesome. 5% is all that's ever going to be sold by Hypha, which got the other 20%. So Hypha was the organization that built all the protocols for SEEDS. And how it got this 20% allocation was it originally asked the citizens, I think this was about 1.5 years, maybe 2 years at this point, I forget exactly when, but it was quite a while ago. They put up this token allocation proposal and said, hey, for all of our work in actually building SEEDS and building code for SEEDS and doing all of this really powerful stuff, building apps, et cetera, we want to get paid this many tokens. And the citizens said, yep, we're going to pay you that much. And that's how Hypha got its share. So it's really cool because ultimately SEEDS was 100% governed by the citizens. They had say on how they distributed all of their initial supply of SEEDS, and they just decided to give 25% in total to Hypha, of which 5% Hypha is going to be able to sell. And what's really cool about that 5% that Hypha was selling is we only have, and by we I mean I'm part of Hypha who's making these videos, but we've only reached 2 of our milestones. So there's 2 more milestones that Hypha is going to get paid. So there's about 2.5% of the total supply that Hypha was yet to receive. And other projects within SEEDS were showing up and helping build it. And they said, hey, we think it's unfair because it's no longer just Hypha contributing to growing SEEDS. We want to get a share of that too. So the conversations we're having real time right now is like, great, how do we talk about splitting up those milestones? Let's give the citizens control to say, hey, we think Hypha did X% of helping us get to this milestone, and that organization helped us X%, and that one did too, et cetera, et cetera. So we're really trying to reconsider how we do this initial allocation and who's being compensated and rewarded in the system. yeah, and if you want to be a part of that, if you want to help grow this, if you're excited about this, like anyone can show up, start adding value and start earning value for doing it. So come join us, please. Yeah, final thoughts here on the on my lovely meme here is this is ultimately what we're going for. Is a little small basket of our farm fresh fruit right here and vegetables. We want the current value of seeds to be able to buy you more before go live, and then be able to have stability after that. So again, the reason for doing this is because we still need to compensate that risk. There is a risk that seeds becomes nothing. That we try all of this, we put all of this energy in here, and then some unforeseen thing happens that causes this whole thing to collapse. And the earlier and the younger we are, the greater the risk there is. And we think that's something worth compensating. But once we have a healthy enough economy and there's some stability there and that risk is no longer as present, we want to say, okay, we want to stop compensating risk so much with the price of seeds going up. We want to start stabilizing that a little bit more. And what's really cool is we're talking about real stability. So you're being able to buy the same amount of stuff over time is what we're aiming for, rather than less stuff over time, or consistently more stuff over time. So again, a steady state economy is ultimately what we're going for here. All right. And that is everything. So walked through, there's quite a little bit over an hour. One of the longer episodes that we're going to do, but there's so much to pack into here to give you kind of an idea of how, Seeds compares to some of the other projects out there. We did